One name stands out as we look at trading industry benchmarks: Jim Simons. Jim Simons is undoubtedly among the most successful traders in the entire world. Backed by his mathematical prowess, his company, Renaissance Technologies, a well-known quantitative hedge fund in the US, made billions on the stock market. Over a 30-year period, Renaissance has generated earnings of over $70 billion, and his medallion fund, with an average return of around 66%, is worth over $130 billion. All prospective traders may find inspiration from his success story. Let's talk about Jim Simons, the man who decoded the market. Math prodigy at an early age. As soon as Jim Simons realized what math was, he was fascinated by it. He showed a strong interest in numbers from an early age, and had an extraordinary talent for numbers. By the time he was 3 years old, he could solve complicated math problems. He was once discovered by his parents dividing integers from 1024 by 2. At age 3, he had unknowingly began working on a classical math problem from the Greek philosopher Zeno. After graduating from high school, he was encouraged by the family doctor to pursue medicine because of his math skills. However, the young Simons had other thoughts. Enamored with the life of a professor, he decided to study mathematics at MIT. In 1958, he graduated from the Massachusetts Institute of Technology with a bachelor's degree in mathematics, and in 1961, after only 2 years, he graduated with a doctorate in mathematics from the University of California, Berkeley. And now, it's time for a pop quiz. We'll give you the answers at the end of the video. Question 1. At what school was Simons teaching when he decided to go and work for the National Intelligence Unit (IDA)? Harvard, Columbia, Stanford. Stay tuned to find out. Harvard math professor. During the 1960s, after brilliant academic accomplishments at MIT and finishing his PhD so quickly, Simons landed a teaching position at Harvard University, where he was a well-liked lecturer because of his relaxed and upbeat demeanor. His casual aggression and nonchalance won the students over. He was modest and approached his lessons with the freshness of a novice, and he never bothered to wear socks. Question 2. Why did Simons leave the National Security Agency? He wanted to go back to teaching. He was fired for opposing the Vietnam War. He found another job. Stay tuned to find out. A Soviet Cold War codebreaker. After only a couple years of teaching, however, he became bored of academic life and wanted to explore other possibilities. In 1964, Simons joined the Institute for Defense Analysis, IDA, a prestigious research group supported by the American government that employed mathematicians to assist in deciphering Soviet spy codes. The IDA had been struggling for more than a decade to consistently break the codes, so they decided to hire individuals like Simons, who had a brilliant mind and many original ideas, even though he had no previous experience cracking codes. While at IDA, Simons used his mathematical models to analyze data patterns, which laid the foundation for his algorithmic method to predict market movements. He was fired in 1968, however, at the age of 30, following his disclosure to colleagues that he opposed the Vietnam War, leaving him feeling let down. Due to his financial curiosity, he decided to start a hedge fund with the knowledge he gained while at the IDA. At 40 years old, he founded Monometrics and in 1978 made his entrance onto Wall Street. Question 3. Where were Jim Simons and his partner Leonard Baum when they got a signal from the algorithm that they should buy the British pound? The store? The bank? The beach? Stay tuned to find out. Creating algorithms to predict market movements. Jim Simons took a fundamentally fresh approach to the financial markets by using his mathematical skills to uncover hidden patterns. He worked with his math genius colleague Leonard Baum, who also created the well-known Baum-Welch algorithm. Together, they made educated predictions by examining a sequence of occurrences and calculating probabilities. Their efforts would go on to play an important role in the development of today's speech recognition technology, as well as for Google's search engine. In 1979, before the advent of digital trading, Simons and Berkeley used paper graphs and charts to analyze data in their small office on Long Island. They applied their algorithm to the currency market and quickly began making significant profits. One day, while on the beach, Berkeley had a realization that the algorithm was indicating a rise in the value of the British pound. The two rushed back to their office and invested a large amount in the pound, which magically rose just as the algorithm had predicted. They had no knowledge or understanding of the factors that led to the increase in the value of the pound. They simply followed the signals of their algorithm. The monometrics program, however, ran into some significant difficulties. During one transaction, the program failed to sell gold quickly enough and it fell sharply, suffering massive losses. The firm eventually started to lose millions of dollars every single day, trying to read market fluctuations. Simons still needed to create an algorithm with far greater accuracy. He decided to experiment with computers, because he thought they would be far better at handling data than human brains. Computers are considerably more accurate and have no emotions. As a result, the program was renamed Renaissance Technologies. It was the official birth of the quantitative hedge fund that would forever alter the financial landscape. Question 4. Although Simons' algorithm was successful, why did his first hedge fund, monometrics, fall into financial trouble? The algorithm took too many trades. His partners stole the money. The algorithm didn't know when to exit a trade. Stay tuned to find out. Using computers to refine the algorithm and process data. Simons and his business partners purchased many pricey computers with vast amounts of data storage and quick access to market data. He entered this data on his computer, and with the help of improvements made by James Axe, a Roy Fund mathematician, coupled with Leonard Bam's predictive mathematics, the results were nothing short of amazing. No one in the world of hedge funds at that time had access to live market pricings like Simons did, and no other hedge fund had the ability to analyze the data so comprehensively. Additionally, by the time they had improved their algorithm, more potent computers were readily available, improving their ability to keep track of fresh data. As a result, they created a new fund called the Medallion Fund, which became Renaissance Technologies' most successful portfolio. Renaissance aggressively sought out more brainpower as it increased its investment activities and attracted large amounts of capital from more experienced investors. The Medallion Fund eventually overtook other international portfolios in terms of profitability. It currently has Wall Street's best track record. The Medallion Fund outperformed illustrious investors like Warren Buffett from 1988 to 2018, with an average yearly return of 66% before expenses. The fund is so lucrative that the company levies high fees on its clients. After all fees, the average annualized returns over 30 years were around 40%. As of 2022, Renaissance Technologies is in charge of managing $70 billion, while the Medallion Fund is worth $130 billion. So, that's it for this video. What did you think about it? Let us know in the comments section below. Here are the answers to our quiz. Question 1. Harvard. Question 2. He was fired for opposing the Vietnam War. Question 3. The beach. Question 4. The algorithm didn't know when to exit a trade. How did you do? Let us know in the comments section below. If you are new to our channel, be sure to subscribe and ring that notification bell to get notified about our latest videos. Thanks for watching.